Good morning. My name is Scott Ruther, Chief Strategic Officer of T3Live.com. I'm here with JC Parets, who is the founder of Eagle Bay Capital. You know, I've been watching JC for a while on Twitter. We were very like-minded, into technicals, into price action, and a lot of similar thoughts from basically the same school. So it's a pleasure actually having you here in my home, in my studio.
No, thanks for having me.
Well, thanks for coming down.
Sure.
I think a few weeks ago we were talking about the markets, and you were telling me about some of the opportunities you saw this year that you took advantage of, some of the themes. So I wanted you to come down today and talk to the T3 Live audience as well as everyone else out there on some things that you're thinking about. So as we enter today, what are some of the thoughts that are running through your mind in today's market?
Sure. I think a big common theme right now is really that overhead supply. You run into the S&P 500. I think that's trouble. The mid caps, the Russell 2000. Look at a name like Apple. That's really a common theme. I think one of the big things that we came into the second quarter looking at was the fact that the consensus in U.S. dollar strength was really to an extreme that, quite frankly, I've never seen before. Not just anecdotally, but the evidence itself, the actual sentiment data, really suggested that there were more dollar bulls than we've ever seen.
Well, I do remember on Twitter when I think every single person in the media came out and was like, we're going to see parity between the euro and the dollar. At that point, I'm like, well, this is not really the time to get excited. I remember you tweeting that. So if you look at the chart of the UUP, you'll see that was coming right into this extreme. Whenever you get extended from what I call the 8 and 21-day moving average, you always want to take a little cautious. And then once you had this big potent down move there, that was your first shot across the bow. And then basically, this trend was somewhat broken. So if you use the 8 and 21-day, that could have been your out here, and we've had some significant dollar weakness. So with that being said, what were some of the things that you took advantage of to the upside to start the year, and where do you think there are still some opportunities in that?
Sure. So you really want to look at some of the names that really got hurt because of dollar weakness. Anything really emerging market related, the energy complex, base metals for that matter, that whole space, that whole emerging global growth sort of theme has really gotten hurt, with that dollar strength. So it's kind of that mean reversion, everything really coming back. And that was our theme coming into the second quarter. So, if you want to look at a name like Caterpillar, for example, I think a company like that, really, brings that whole theme together. Big winner for us, coming into the second quarter. A couple of weeks ago, like you said, Scott, we took profits. A lot of these things really started taking off. We really took a lot of risk off the table. But I think that theme continues. I think weakness can be bought. You want to talk about a name like Freeport-McMoRan.
So before we get into that, let's just talk about Caterpillar. So in your estimation, I know that we've had a decent move, a move off the lows. This is when it started perking up. You've had a bit of follow through even yesterday while the market was weak. So, where do you think that would be a good target? Do you think it, gets to the 200-day and obviously usually it pauses there? Do you think it reclaims it? Or, do you think that, a big part of this mean reversion trade is already over because, this is all this, it seems like a big move, but from where it came from, in perspective, not really.
Yeah, I mean, yes, 100%. I think we have seen a big move. I think that to be chasing it today, to be putting a lot of risk on today, that's not something I would be doing, something we want to be buying at the beginning of the month. But I will say that we want to be buying weakness. I think we are going to get some sort of bounce in the U.S. dollar. I mean, this thing's gotten absolutely destroyed over the last, really it peaked in mid-March, really. So this whole mean reversion has already been taking place. But I think this theme is here to stay. Where do we want to be taking profits in a name like Caterpillar? I think that 200-day moving average, that mean reversion, at the end of the day, that's the mean. I don't really look at a lot of moving averages. I stick to the 200-day, 200-week for me. I'm a keep it simple, stupid kind of guy. That works for me. Everybody's different. But yep, I think that's where we're going. I think any weakness in a name like that absolutely needs to be bought. I think you need to buy names like that on any sort of dollar strength, which I think we ultimately get those bounces, and we need to take advantage of that.
Well, if we just real quickly go back to the UUP, so basically you just saw a move to the 100-day. So if you're saying just say we do get a bounce in the dollar and it comes back to here to test the moving averages, that would mean that some of those names pull back, and that's where you would like to look at them. As far as you mentioned FCX, this also, had a pretty potent move. I remember guys talking about it. Technically, it woke up right here. This is what we call that igniting bar, and then you saw some commitment to it, and now it's also had a move. But below the 200-day. So I think this looks very similar to Caterpillar, where you've had your first move and now a little sideways action, let the moving averages catch up, and why not see the 200-day? So both of those, in my opinion, if you got out of it when the trend broke, playing it to the back to the resistance does make sense. You mentioned to me about the S&P, which we as traders we want to see what the market's doing overall, and I went over in my morning call how I feel like we're at somewhat of an inflection point. What would your gut say to you right here with trying to hold 2090, 2094? Would you think we see 2060 first, or potentially above 2025 first?
Gun to my head, I think we probably head down to 2060. That overhead supply is just very clear. I mean, there's no arguments against that. So to be buying stock, this could be anything. We're talking about the S&P 500, but supply and demand is what it is. I mean, we could be looking at any stock right now or any index. There's just very clear overhead supply. So do you really want to be buying aggressively into overhead supply? I mean, a guy like myself, I wouldn't do that. I'd rather be buying that weakness towards that 2060. Like you said, structurally, the S&P 500 still looks great. Market still looks fine. But from a tactical perspective, in terms of putting money to work and for risk management purposes, to be getting aggressive here is tough.
Yeah, but with that said, if you don't see 2060 and we hold 2090, chances are we eat through some of that supply and you can get a cleaner move.
100%. I think the longer we hang out up here, the more bullish it is. Totally.
And then I think as far as what do you think about the BIOS here? The BIOS, I know, did its breakdown. It put a lower high in. It helped lead the market the entire time. When that Biogen news came out and it was sold, that was your first shot across the bow, and then you had a lower high here just in case you didn't get out. And right here with it coming into support around 233 to 238, the BIOS interest you here, or you just want to watch it as somewhat of a gauge?
I got to tell you, Scott, the biotechnology, when you talk about technical analysis, when you talk about supply and demand, I mean, it doesn't really get cleaner than the biotechs. That Friday, I'll tell you the exact date, it was March the 20th. It was a Friday. You mentioned yep. You mentioned the Biogen news.
I remember that was sold. Look at this. That was the news that was sold that everyone on TV was so excited about.
Yep.
And this is also in technical world, you never want to see a gap get filled. That shows you it's an exhaustion gap versus a pro gap. And then I remember it came out with news 3 different times, and each time it came out with news it was sold. So that tells you it wants to go lower.
Absolutely.
So here you have the 200-day, so maybe somewhere around here, you get a retracement. But like you said, there are clues out there. And also Amgen, I thought, was a clue because it came out with great numbers, and on those great numbers, it was sold. So it wouldn't have been sold on great numbers if there was more momentum, and now look at it. So there are some clues when people say, how did this happen?
Yeah, I mean, I got to tell you, Scott, if you want to punch up the XBI or the IBB, either one, I'm not a big media guy. I don't do a lot of reading in terms of what journalists have to say or in terms of television during the day. So I'm not really sure what was being said. But I got to tell you, when you see a candle like that on a Friday where you have a gap up and it melts throughout the entire day, that's a huge signal. We actually bought put options that day. It was a Friday. We covered the following Wednesday, which was that big giant red candle the following week. Yep, that was a Wednesday. We covered on that day. And then notice how this recovery rally over the last month, look where it peaked. It peaked really right where the destruction started on that March 20th. So when it comes to supply and demand, when it comes to technical analysis, I got to tell you, there are very few charts out there that have behaved this well. I think this was very clear. I think you faded it, last week, running back into that same resistance. I mean, you can't make this stuff up, Scott. I mean, it's as clear as day. Would I be a buyer of biotechs on this pullback? I wouldn't. Do we probably get a little bit of a bounce or something like that? Sure, I think you fade it. I think that whole healthcare biotech trade, I think that's over. I think it was very crowded. And I think what you're seeing is really that sector rotation. People talk about the S&P 500 running into resistance, S&P all-time high, NASDAQ all-time high, this and that. At the end of the day, there's so much more important things taking place, in my opinion, that sector rotation into energy, base metals, emerging markets, that whole world that has been forgotten, as people are chasing the Biogens of the world, that's really what's taking place.
Well, with that said, I came out with a call saying I thought there was a 65% chance the low in oil was in, not because, again, the think tank, the feasibility study, it's all because of technical analysis. You look here at the USO, that was on this day. This was the day, This was the day that everyone came out and said, I remember the Citigroup said it was going to go to 20. This is when I think G-Man said it has to go into the low 30s. But that outside day, when it broke below, came back above, that was your day to take notice. And since that, you've had a nice stair-step higher. And even yesterday, I remember sitting on my desk and I was buying the USOs at 20, and it went to 2040. Gave you like a 2% trade in the USO. And to me, it looks like this has a home probably a little bit closer to 22, which I think would be what, 62 to 64 in oil?
Yeah, I couldn't agree more. I think the trade here, I think it was a home run. When we broke below the January lows, I like to look at RSI. I use a 14-day relative strength index as my momentum indicator. So what I was hoping for was an undercut of those January lows, and then a higher low in momentum. And rarely does the market do exactly what you want it to do, but hey, we'll take it when we can get it. That's exactly what we got. We got a lower low in price, higher low in momentum, and then once we undercut it and got back above the January lows, it was an easy trade, because if we break back below the January lows, all bets are off. But as long as we're above it, you can be as aggressive as you want to be. We were fortunate that obviously it worked out, but it goes back to that same theme: the energy, right? The energy, the base metals.
So let's go to the XLE while you're talking about that, because a lot of things technically happen here too. Like this was that we call it the red dog reversal. That we try and be affectionate here. Guys like to, because it's my name, whatever. But remember, right here, it pushed below the December low, came back above it. You could have been long this day versus the low, and just sat. Okay, but obviously we don't do that as traders, but I think here it's coming into a pretty crucial time. You had a relative strength yesterday where the market was low. The 200 days right there. You have a gap to be filled here. A lot of people are really underinvested there. If you sold the XLE when, one of my set of rules are first, as an active guy, when it breaks the 8 and 21 day, you're out. That was right here. Then as an institutional guy, if it breaks the 200 day, hovers below, you're out. And if you did that, you had none of this pain.
Yeah.
So here's your bottom, and then even if you miss that, here's your higher low, and then all of a sudden you had this tight range where it held halfway above this, and then continued. So in your opinion, do you think the XLE has a home a little bit closer to 86, 88? Or has most of this trade run its course?
We were looking at the Caterpillar, we were looking at the Freeport, that 200-day, that mean reversion was the target. I feel the same way about the XLE. If you want to pull up one more chart, if you want to look at XOP, which would be digging in a little deeper into the energy complex, these are the E&P names. When you want to look back at that top, you want to talk about a head and shoulders top, they don't get cleaner than that, Scott, as you know. We totally broke down. And once it collapsed, we saw a similar mean reversion. I think a lot of our upside targets have been hit. In energy in particular. So it's not something I would be buying up here. It's already worked. I'd like to see some more information, though. Gun to my head, I think we still head higher, though.
Okay, so at this particular point, a little cautious as far as the overall indices, maybe some downside. The mean reversion trade in oil and base metals can continue. Dollar weakness, short bounces, and buy weakness for now, and we'll revisit what happens in the next month or so.
Scott, you and I, we're athletes, right? We're athletes, so like Ted Williams said, wait for your pitch.
Exactly.
Sit tight, wait for the pitch. It'll come.
It definitely will come. And at this point, if things aren't compelling to you as a trader, you could just pick your setup, wait for your pitch. Don't overdo it. Let the market give you a bit more clarity. We'll be back later in the session.